Morning. So it's 8:40 a.m. and about 20 minutes to market start on 24th of Feb. And I thought that it's a good time to discuss the impact of yesterday's trade session on the overall short-term move of the market. So as we have so far outlined that we are in a bullish trending market, and we know this for a variety of reasons, one of them being that we had higher top at 12,035. So we can see here that the market had extensively ranged around this level. This range lasted from July all the way right up till September, so approximately a 2.5 month range, after which the market did struggle to take out the range. So at this point we have what is clearly a higher top. And this is a low. At this point we can see that this is clearly a higher bottom which got formed after the break of the range, and subsequently, characteristic of an uptrend, the market did what an uptrending market does. It went on towards creating a new higher top. A sharp intraday correction to this is a 5% correction on a single day, and immediately after this correction the market bought into itself, creating another higher bottom. This continued right till here when the market created a higher top again. Sorry, this is would be higher bottom 3. So another way of looking at it is basically, if I just break this right till here, we will see that after creating this higher top, we can see the sub price action. This really plays out in the hourly charts very well. We see a formation of an M pattern right here, and this M pattern corrected itself into a higher bottom 3. So till here we have the more accurate representation of this is a higher top, and this one would be a double top, which would mean that this is the first point at which the market truly ranged. And characteristic of a bullish range, the market broke out the range, creating a new higher top. So officially kickstarting yet another move. And this is the first one again in the series. And now we are here. The question basically remains that is this the potential higher bottom, or does the market tend to go any further lower right till here, which is a gap support? These are the two questions. So here I'll just mark out the region of gap, which is quite apparent, and if you individually conduct this exercise you will see it for yourself. So we are wondering if the 14,400 500 zone is the first corrective point, or if the market in fact decides to form a bottom here. So which means that we are asking ourselves the question that is this the higher bottom? Now, the question is, what are the reasons for us to ask this particular question right here? And the obviously, as we know that we look at candlesticks for determining any short-term pressure and reversal points, we can see that on the 23rd, the market has actually formed a textbook inside day, and any green closing above this candle significantly reduces the chances of the market to make a move downwards, which means that if the market were to do something here, it significantly lowers the chances that the market is going to continue in this fashion. It lowers it. It does not mean that it is not possible. It does not mean that it has never happened before. It only means that the chances for us to go ahead in the market with the long positions in the green is justified prima facie, according to me, and we need not wait for the gap support to come and test. Now, if the market is indeed going to close in the green, then we have an inside day candle which is confirmed inside this very bearish candlestick, and the impact of such a decision is that we must have go long on the market, which means that either shorting 14,500 puts or identifying individual stocks or stock futures which could exceed or outperform the market in its bullish bullish move um, makes sense. Now, so obviously for us, I'll just delete this line. If there is a green closing after an inside day, if it have to happen today or tomorrow, which is the expiry day, um, we we are hoping that the market will continue with this kind of a move, which is, as you can see, a very strong upward move. This is a dream-like situation if this were to happen. But the greater probabilities, if you notice, is that the length of the pullback actually is very quick. The market has completed its price correction, but the market has not completed any kind of time correction. So it is possible that either the market mimics this move that we have had from the higher bottom three to the new higher top, that is right from here till here. Either the market mimics that move and runs all the way here, creating a new top, or the market decides to complete its time correction, and this 15,000 and maybe perhaps 15,150 level starts acting out as a short term resistance, and the market moves in this fashion, etc. So it is so which means that we are now looking at a possibility that the downside corrective move might stem. Hypothesis being that we are seeing an inside day, and what we are looking for today is a confirmation of this candle. If this were to not happen, then this is a fake inside day and the market could continue its move all the way to the gap support. If, however, there is a green, we are looking at two favorable outcomes. One of them being that the higher top is taken out. It is a dream situation. It has lower probability, but if that does happen, the market will trend very strongly and all indexes along all stocks will move with it. If that does not happen, then the higher probability is that the range is only defended and the market starts moving within in a range that this low is defended and the market starts moving within this range. Consequentially, when we add our 50-20 moving averages in obviously a trending market, we see that now here at the 20 moving average, the market is trying to take its support. And if it does take support and continue the move, it is much stronger than a 50-day moving average pullback. Having said that, what should be our general plan? Given the nature of this move, our general plan or our general assumption is that the market is now in a bullish range, and a bullish range needs to be bought on dip, and our focus is going to be on the long side, and obviously our objective becomes to pick up any security that is now trending strongly relative to the market. So let us just have a quick look at our current positions as we head into the market. So these are our positions, as you can see: a long Hindalco, long IDFC First, long IndusInd Bank, short on Nifty. Short on Nifty obviously because Nifty is giving this kind of a move, but if we were to see what Hindalco is doing for the same time period, um, there is no corrective move. Since there is no corrective, so just to give you an idea, so Hindalco future price is at 243.4. Futures tend to take an average premium of 1 to 1.5%, so it is reasonably safe to assume that our entry would have been at approximately 241 levels, which comes around here. 241 is around here. You can see that in the case of Hindalco, there is a textbook up move, a very strong up move. Then we have this formation of fake M, which means that it's in a bullish range, takes this support, subsequently goes on to creating its new top. But after this new top comes back all the way to the support. Here we are seeing a gap down Marubuzo kind of a bullish belt hold candle, a red close and a green close confirming this candle, and consequently this marks our entry because there is no doubt, I mean the closing, that this candle is now confirmed. So we just simply mark our entry here. And I means without getting into the specifics, if this is our entry, which I will just mark with the blue line, there is, I means there is a lot of work done in calculating the optimal stop loss, but this is safe to assume that under no circumstances are we going to stay below this level. I would bet that mostly a stop loss would have been somewhere here, but safe to assume that we are not going below this level. And This is the move that came after that. A few testing days in the middle, but by and large, we just sat as once the market took out this previous high. We are just waiting and hoping that the corrective move can continue for as long. Sorry, the straight move can continue for as long as theoretically possible. And logically, we have had almost a 90 rupee move on Hindalco, which by itself is very strong. And this looks very good on many time frames. So even if I take out a longer time frame, you will see that this has come at its all-time high, and you can see that the market, when it was ranging here, was actually ranging in a zone of all-time high. So and the 4 weeks that we have been quite strong for this particular security. So in a clearly trending market, if you end up catching a trending stock and then trail that trending stock, you're likely to realize exceptional gains if that were ever to happen. But obviously, we know that 80% of the time the market ranges. Therefore, this strategy by itself might not have a very high accuracy, but if it does hit, it can have a very high profitability. So, just a quick word back. Coming back to our positions, Hindalco, IDFC First Bank, it's at 48. We can just have a look at that too on the daily. It's right here. So 48 would mean that there would be some 1 to 2%, so which will make more likely entry here at 47.6 on spot levels. So yeah, and a similar thing, we have a corrective move, a gap down, confirmation of a star formation, and what we have actually seen is not just an up move, but sort of like a rounding based up move, which makes this very strong. We saw a bearish candle yesterday and a doji today. It's this still, the market is not open. So day before yesterday we had a bearish candle followed by a doji, but it is not any kind of a candle. Like, it's not like a bearish engulfing or a dark cloud cover or any of one of those bearish candles. And we would expect that since a new high has been created with the shallow pullback from maybe from here to maybe to this level, we the dream situation would be a continuation of this move, which justifies why IDFC First is there. Similar story for all of these stocks. Perhaps during the course of the expiry, I will run through our positions and understand why we took each trade in slightly more detail. Hopefully, that will be instructive for you, and and you can benefit from it. So best of luck with your trade sessions today, and I will just touch back with you shortly after judging the impact of the open. Take care.